morning and welcome, Patriot Radio News Hour. Joe and Jason on this Friday. Yeah, we made it through another crazy week, and the craziness continues on. Our toll-free number, 800-951-0592. The website at allamericangold.com. And just as we suspected, a new all-time record high. Gold right now up $30, $2,617. Silver's up 40 cents, squarely now above $31, $31.15. The Dow after a big day yesterday, big rally yesterday, off a little bit today. Of course, they went 50 basis points. We talked about this yesterday. And a non-emergency, if you believe that, a non-emergency with a 50 basis point rate cut with more rate cuts to come. Yesterday, I told you I revised up what we think gold's going to be for next year. As we said, we've been calling this pretty much all the way through here. We said probably don't be surprised if we get $2,700. And of course, here we are, right? TV gold, what is it? December gold, almost $2,650. So we're almost there. But next year we are talking about $3,000. I think that's going to be on the low end. We could I hate to say it, I wouldn't be surprised if we potentially see $4,000. I'm not calling for that yet, but don't be surprised if those things happen. Our toll-free number again, 800-951-0592. The website at allamericangold.com. And we had earnings today out of FedEx. FedEx, a pretty big miss from FedEx. The estimate was for $4.77. Came in at $3.60. So a really big miss by FedEx. The company said reduced demand was the biggest constraint there. And Jason, again, I think this is another way. We get all these confusing signs, don't we, about where is the economy truly, the jobs market. Yesterday we had an unbelievable jobless claims number, only 219,000. And then today FedEx says, hey, listen, demand's just not there. I mean, this is a big miss. No, you know, 477, you think, okay, well, maybe 450, 460, all the way down to $3.60 from FedEx. And of course, I mean, I think FedEx is a pretty good barometer of business activity, right? If there's a lot of business going on, people are FedExing stuff, right? You got to FedEx the contracts, you got to FedEx this, FedEx that. Heck, we use FedEx as an example. That's how we ship our products. So it really is. It's a head scratcher a little bit because we know about the Big Lots yesterday. Hey, I know. Hey, we closed 315 stores, add another 300. Right? The retailers have been struggling, and now FedEx is saying, "Hey, people just aren't shipping stuff."
Got to buy stuff to ship stuff, right, Joe? Somebody has to buy it, right? You only ship it if there's something, some sort of transferal, right, going on. You're not going to ship something that for free, right? You're not just going to send it to somebody for nothing. So I think it is a good barometer, Joe. I think for sure.
Yeah, so we'll have to watch it and see how it plays out. We don't have. Here's the nice thing today. Not a lot of data out today. We've got a bunch of the billionaires now. John Paulson, the latest, talking about if Kamala Harris is the next president of the United States, sell your stocks and buy gold. That's what he said. And it makes me laugh a little bit because that's giving a lot of power to a position that I don't know necessarily warrants the power. I've said this all along. It doesn't matter. Does it matter for border security? Maybe. Does it matter for taxes or tariffs? Or does it matter because, let's face it, whoever wins, the other half's going to be, they're not going to be happy. Let's just put it that way, right? Well, if Trump wins, half the country's going to be really unhappy. If Harris wins, half the country's going to be really unhappy. But at least as far as the money guys go, the real rich guys, they're kind of saying, hey, if Harris wins, sell all your stocks and put all your money into gold. I mean, I think that just kind of tells you at the end of the day, I don't think you should do that. You know, don't sell all your stocks, put all your money into gold. But, Jason, having more exposure to gold and silver right now is just a very prudent thing. You know, you think about a year ago, you know that gold's up 36% from a year ago. Gold wasn't even $2,000 a year ago, and here we are talking about when is 3,000 going to be here, and don't be surprised if 4,000 comes. Yeah. And now they're saying if Harris is president, well, if Harris is president, I probably will have to adjust up the pricing for 2025. Patriot Radio News Hour will be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Friday. Finally, it's here. The Dow down 115 points, but it had that big day yesterday. The S&P's down 38. The NASDAQ down 170. The 10-year note keeps ticking higher here. 376. And this is something we keep talking about, this bond market and what is going on here as far as how much debt can we really sell. How big of a problem is it going to be? You know, we talked about yesterday, Jeff Gundlach saying, hey, don't be surprised as the Fed lowers rates here. And by the way, he thinks the Fed needs to lower rates a lot. Right? We already know from yesterday that, hey, they're going to go at least 50 more basis points this year. Jason's kind of, you know what? Jason's probably not wrong on this. They may go 50 basis points again at the next meeting. Right now, it's 25 and 25, but Gundlach is saying, hey, listen, this thing needs to go down to 3. So right now, we're at 5. We know that it's going to be 4.5 at I guess, best case scenario. Worst case scenario, even lower than that this year. But they won't be done there. But he's made some interesting comments about don't be surprised if the long end of the yield curve doesn't go down. Matter of fact, don't be surprised if it goes up. And that's going to put a lot of stress on the equity markets. Right now, oil is a little higher today. Gold, like we said, rolling here. $2,615. Silver higher as well. And I'm just telling you, be more diversified. Protect your assets. How much do you want to risk? It's great. Listen, it's great. When Wall Street's going up, it's great. What happens when it isn't going up? And that's where our friends over at Y-Refi come in. You can get great fixed rates of return, up to 10.25% fixed rates of return, not correlated to Wall Street. Doesn't care about Jay Powell and rate cuts, doesn't care about war, doesn't care about pagers blowing up or anything else. You can turn your income on, you can turn it off, you can compound it. They don't charge fees. Yeah. Check them out. InvestYRefi.com. The word invest, the letter Y, REFY.com. Or just call them. 888 Why refi 24? And Jason, today, everyone's starting to question Jay Powell at his press conference because he kept stressing in the press conference that the economy is strong and this is, quote unquote, just a recalibration. And people are starting to ask, well, wait a minute, which is it? If the economy is strong, like you said, why did you go 50 basis points? And why are you telling us even more rate cuts are coming? And I think this is really the big question. And I think the answer is really simple. I think it has more to do with debt problems than it actually has to do with the economy. You know, they say, well, inflation close enough. We're not going to worry about it anymore. And we're worried about jobs. They keep saying that we're worried about jobs. We're worried about jobs. We're worried about jobs. But the government jobs numbers don't look bad. Now, of course, he poo-pooed those numbers and said they're not right. But the realities are GDP 3%. What's the problem? And I think this is the one thing that is, I guess, he really can't tell us the truth, can he? I mean, what could he say? Could he actually go out on TV and say, hey, we're doing this because we're worried about the debt markets. We got to do this because if we don't, we're going to have problems. I mean, I guess he can't say that, but the message that he tried to deliver on Wednesday about this strong economy and, this big rate cut, it was just a recalibration. That's all. It's just recalibrating. That's all they're doing.
You know, what moves the markets the most is the big money, not the small money. And a lot of the big money, not all of it, but a lot of the big money wants to borrow, right? They want to borrow when they buy, Joe. So I think they're going to flush these rates as low as they can to get the big money to borrow and buy. Like you said, the debt markets, how do you get people to buy more debt? Well, make it cheaper, right? And then it'll be short-lived into early next year. And then once the big players are done buying into these lower rates, once let's just say Jerome Powell comes out next year, it's like, we're not going to lower rates this time. That'll be it. And then the big buying into the lower rates will be over with. And the inflation will come roaring back because the rates are too low. They'll have this big spending bill coming in March and April next year, and the spend, right, Joe? Well, who knows, wars and everything else, all that other stuff. And we'll turn this thing right around, and we'll be back at 5% by late next year, or maybe higher, Joe. So you want the big money to spend, right, Joe? That's what they want. They want the big money to spend. They're not going to spend, at least the Robert Kiyosaki's, they're not going to buy if the rate's higher. They're going to buy if the rates go lower, right? Borrow to buy, and then the Warren Buffetts of the world, they're not going to spend that cash on the sidelines until there's cheap assets. Well, once the inflation comes back and you start to have the markets suffer, then you'll have the Warren Buffett opportunities on the back end of that to buy all the distressed assets, Joe. We're going to have a lot of more billionaires than we did during the COVID times. You're going to see a lot of rich people getting richer, and you're going to see a lot of people getting into the rich club. This is how they do it, Joe. It's not for the citizens, right, Joe? It's for the big movers. You got to please the guys that put those people into office, and the Federal Reserve is no different, right, Joe?
Right.
The biggest money is in the Fed.
When they lower the rates, that's what they want you to do. They want you to take that money that's in your bank account. They want you to go out and go into more debt, right? Hey, okay. A new car's 50 to 100 to 100, I guess 50 to 150,000, depending on what you buy, right? Hey, you can buy it. The interest rate will be a little less. Go buy one, right? Maybe homes. So far, we haven't seen it in homes. Businesses, right? As to Jason's point, hey, if the rates go lower, they'll borrow money just to buy their own stock back if it becomes good enough, right? If the rates become attractive enough, right? They'll borrow money just to buy back their own stock. So this is exactly what they're trying to do. The question's going to be, how low do they have to go to make it happen, right? Yeah. That's the problem, because a lot of them face it. 3 years ago, you could borrow for next to nothing. Everybody did it, right? Everyone did it. So how low would they have to go? Let me ask you this. If you're sitting in a 3% mortgage, How low do mortgage rates have to go to get you to decide, hey, let's move, right? Let's sell this place and buy a better place. How low would they have to go? And Jason, this is the problem. I think what Jeff Gundlach was saying yesterday is it won't matter how low they go. The bond market, in his eyes, he's saying the bond market's not going to cooperate. They're not going to cooperate with the Fed and say, hey, you're down to 3%, maybe you're down to 2.5%, but yet the 10-year note is at 4%, as an example, right? The 10-year note, who knows, maybe it's at 5%. And all of a sudden, they can't get it to work. And it's going to be interesting. I think 2025 is going to be a very painful year because I know what the Fed is trying to do. But the problem is the bond market is now saying, hey, hold up here. Right? Look at the bond market's reaction since Wednesday. First of all, we got a bigger rate cut than we thought. So there are some people saying, okay, 50, but most people were saying 25. And the 10-year note keeps going up. We had a terrible auction the other day, right, after this big rate cut. I don't know, Jason. It's going to be interesting. I know the CEOs had their annual CEO survey talking about headcount and hiring over, I think it was like 70% of CEOs said we're either going to have the same amount of people or less people. Only about a third of them said that they planned on doing any hiring at all. And my question will be, listen, here's the sad part. This economy slows down anymore. Why do I get the feeling that 30% is going to be like, never mind, right? Never mind. We're not going to hire at all, right? We may have a situation where the hiring, right? Like right now, I'd say hiring's kind of, for every person that loses a job, there's probably someone getting a job. Right? We're no longer in that, hey, we've got 5 jobs open, but we don't have 5 people applying. That's gone. That's gone. But I would call it about even. When that's the feeling I get is, okay, for every one person that loses a job, somebody's getting a job. That's about as good as it's going to be. And now the CEO said, hey, in 2025, for every 5 people that lose a job, maybe only 3 or 4 jobs, right? So now all of a sudden, will we see negative job growth?
Well, and for every 10 people that are fired, how many of them have a second job so they can't count unemployment? 10 are fired and 5 of them have a second job. Yeah. You can't get unemployment up if everyone's having to work 2 and 3 jobs. Paying the bills is not easy. I mean, Brooke and I were looking for some friends about renting houses in this area. It's exploded. A nice house is $3,500, and a tiny little nothing house is $2,500 a month for something that's just bigger than a double apartment or something, Joe. People have to work more to make those bills, right, Joe?
Yeah, renting a house. There's plenty of apartments here, and they're all the same, right? They're 2,000 to 3,000 in the nice areas. In some of the other areas, you're still looking at 1,500 to 2,000. I mean, there's nothing. Think about, I can afford, I don't know, $1,000 a month. Good luck. Right? It's going to be somewhere where, let's face it, most people are like, well, gosh, I don't want to live there. Right? I mean, this is the other thing, too, that they're also, just so people know, the Fed is banking on apartment rents to stop increasing. That is their big thing. This is why do they think they've won inflation? That is why. They believe that renting will at least stop going up. Most people, if you're paying $1,500 to $2,000 a month, You're going to pay $1,500 to $2,000 a month next year. That remains to be seen. It's going to be something that I think where with rates going down, maybe they think that people will move out of apartments and be able to buy a house, but there's got to be a house to buy. That's the problem, right? There's got to be a house to buy. When we looked at existing home sales the other day, the numbers sucked. But 60% of homes sold were on the market for a month or less. 60% of the homes sold were on the market for less than a month. And I think this is kind of the housing market now. Hey, you got a decent house, it'll sell. Anything that needs work or what have you just kind of sits there, right? That's kind of the market. And I don't know if interest rates fixes that. I don't know that it does. We'll see. I know, right? Everyone's scratching their head. Is the economy good? Is it bad? What is it? Is it an emergency? Nobody seems to know. Patriot Radio News Hour. It's the year of chaos. We'll be back. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Friday. As we stated, new all-time record highs in gold right now. Gold at $2,615. We're really getting to this point where as this market continues to unfold, we see, we'll call it de-dollarizing. I mean, that's kind of the theme, the word, where all of these countries are just, hey, we're just going to hold less, right? We're going to hold less dollars. We're not going to have no dollars. I mean, some do, right? You'll have the Russias of the world, but by and large, the rest of the world is just saying we want to hold less. And now, they've got a meeting next month on the 22nd. 34 additional countries are asking for BRICS membership. Right? We've got 11 now that are formally in BRICS. I don't know how many of the 34 are going to be included. I don't know. It looks like there's some definites. Malaysia, not Taiwan, Thailand. They look like they're going to be definites. I think we're going to see some more African nations joining BRICS. Don't be surprised if we get more countries from the Middle East. That's kind of the way I look at it. You're going to see growth in Asia, the Middle East, Africa, all of these countries saying, hey, we just want less dollars. We don't want to get rid of them. We just want less of them. And a lot of those countries, what are they doing with those dollars that they're going to sell? Because that's when they say we want less dollars, they're going to sell some of their dollars. In other words, let's just say on Monday, as an example, hey, this country X has $1 billion of treasuries that are maturing. Okay, so they're going to mature. Normally, what we'd like to see is not only for them to rebuy the billion. We'd like to see, hey, maybe they'll add, right? Maybe they'll buy 1.1 billion, right? Or 1.2. That would be great. That's not happening now. Instead, they're saying, well, you know what? Maybe we'll buy 800 million. Right? We're going to cut it. We're not going to roll over the entire $1 billion. What are they doing with that money? And the answer, and you guys know the answer, they're buying gold with it. That's what they're doing. right? Remember, the IMF did their survey of all the central banks and asked them, how many of you are going to buy gold in 2024? And the answer was about 30% of them said we're going to buy gold this year. Then they asked, well, what about in 5 years? What's your plan? 70+% of them said in the next 5 years, we're going to be buying gold. Of course, they asked them the other side. Well, what are you going to sell? Because you got to sell something to buy something. The answer was dollars. That was the answer. And we're seeing, obviously, gold doing what it's doing. And yesterday, I come out and say, hey, listen, I know I told you 3,000 next year, but you know what? We got to go a little higher than that. We got to raise that. We got to raise it. Right? And you know, is it going to be 33, 34, 35? I hope it's not 4, but 4, you can't rule out 4,000. You can't. It's getting harder and harder, right? The ounce of gold is still an ounce of gold. It's just how many dollars does it take to buy it? And why is it taking more dollars to buy it? Well, Jason, the answer is simple. All of these countries are saying we just want less dollars. Which what leaves more dollars that we have to take care of. And again, this is why both of us think inflation's really going to probably come back more than a lot of people think.
Yeah, I think it's pushing everything, Joe, the inflation. I think the money they printed in 2020 is still leaving a massive scar that's to be dealt with. Yeah. Now, the numbers are getting better at the right time of the year for this rate drop cycle that they're putting together, but it all comes down to what kind of spending needs to be done. Who's going to need it? Who's going to get bailed out, right? Listen, gold will stay nice and cozy in the 2,000 range if the government doesn't spend a whole lot next year. If nobody needs to get bailed out, if there's no war started, the oil's being pumped out just fine, Joe. Then yeah, we could have 2,900 gold or 2,800 gold, 2,700 gold. It could be there next year. But, Joe, all of those other things I mentioned are probably going to happen. And that's going to spend. And you can't get rid of inflation by spending, Joe, by printing it and spending it. It's going to be printed and spent. Just because the Fed isn't printing for COVID like it did in 2020 doesn't mean it's not printing to pay for the government's spending, right, Joe? The deficits are huge now. Deficit equals printing. Right, Joe? The money has to come from somewhere, as fake as it is, right? You got to have it to pay the bills. So it's being printed, just not like 2020. Are we going to see 2020 type spending with whatever imagined or real emergencies come our way, right, Joe? So that's why inflation will come back. And then this is the time of the year right now. I think a lot of these businesses that are firing people and cutting stores, Walgreens and all these other things you mentioned over the months here, Joe, they're gonna slash and want to get rid of inventory because taxes. You don't want to be holding on to a whole bunch of stuff at the end of the year. Empty the warehouses, right, Joe? Empty the warehouses because who knows what's going to be purchased after Christmas is over.
Yeah, it really is it's an easy pattern to see. It's not a good pattern. It's not a pattern that we want to see. But why would a guy, the bond king, Jeff Gundlach, why is he saying that the rates, even with the Fed lowering rates, don't plan on the long end of the yield curve going lower? This is why. Because all these countries are, again, it's not like, they're not saying we don't want any dollars. They're just saying we want less. And now 34 more countries are putting their hands up saying, yeah, less dollars sounds pretty good. Hey, when we get back, we got a great fractional gold special coming your way. You're not going to want to miss it. We'll be right back. Well, just like that, Fed Governor Waller, Christopher Waller, he is out on CNBC saying inflation continues to fall faster than expected, saying that his favorite inflation gauge is only running at 1.8%, putting him into the 50 basis point rate cut camp. So here you go, Jason, already starting to kind of hedge their bets as to are we going to get 25 or 50, and just like that, boom, new all-time record high for gold. Gold's now up $35, 26.21. Great opportunity here in the fractional gold market, and I'll say this: it's getting to the point where always, like everything, we tell you to be diversified in your investments. Right? Don't put all your money into gold. Don't put it all into stocks or housing or bonds. You know what we're talking about. But in your gold and silver holdings, you really do need to be diversified. There's a lot of people out there. Hey, I want $20 gold pieces. They're the least and the most private, and that's all I want. I get it. But as we see these prices continuing to skyrocket, having this fractionals, Jason, I think it's going to be a really good idea, because when you're talking about, now we're talking about, hey, you can't rule out 4,000 next. You can't rule it. I'm not saying that it's going to be there. I hope it's not. Because that means things are going in the wrong direction faster. But you can't rule it out. But you're like, well, gosh, I don't need $4,000. Right? I need $1,000. I need whatever, $500, whatever. Maybe if and when people need to sell. And obviously, right, if it really hits the fan, hey, I got some barterable material. The best barter gold coin, the 10th ounce American Gold Eagle. We're the cheapest in the country. I was out there looking all over the place. There's these online. I've seen it as high as $370 for 10th ounce gold eagles. One place, if you bought 100 of them, $317 if you bought 100 of them. We've got them in any quantity you want for $310. Just average. That's about $30, $40 below what everybody else is per coin. Like I said, there's plenty of you'd be shocked how many people want $400 for 10th ounce, right? The cheapest ones are the newest one. It doesn't even matter. Listen, 10th ounce American Gold Eagles at $310 today. I know you're like, well, gosh, that's $3,100. Yeah, well, guess what? Gold can be $3,100 here really, really soon. And then what? What are you going to pay? $34, $35, $36? And then $5 Liberties, the old private gold, $5 quarter ounce Liberties, $30 off today. We've got 75. So that's a good amount. It's not a ton, but we got 75 $5 Liberties, $735. 800-951-0592. And Jason, gold keeps climbing here, almost up 40 now.
Gold is not expensive because it's easy to accumulate. Gold is expensive because it's hard to accumulate. That's why it's called a precious metal. We know that a lot of people are earning the same money as this inflation has been going on. So, you always hear ounce of this, ounce of silver, ounce of gold, ounce of silver, ounce of gold. Well, you don't have to buy an ounce of gold every time. So fractional gold, if this is in your price range, you don't have to have the ounce of gold. You don't need to save up for the ounce of gold. You can get fractional gold. Fractional gold costs more above spot per ounce. But when you sell it, it's got a better premium when you sell it as well. So you get on both sides. And I know, Joey, I talked to you this morning. Some people just don't have $2,700 to get an ounce of gold. They just don't have it. But there's no shame in getting the tenth of an ounce of gold or getting the quarter of an ounce of gold. Because if gold goes from $2,000 to $4,000, your $300 worth of gold is now $600, right? You got to get it there first. It doesn't matter if it's an ounce, a half ounce, tenth of an ounce, quarter ounce. It doesn't matter. It's about how hard it is to accumulate and getting it, having the discipline to get that put into your savings. You're saving it in gold instead of saving it in dollars, digital dollars, physical dollars. And I remember when I first started, we'd sell these 1 ounce coins, and then as the gold got really expensive up to 2020, then suddenly a half ounce $10 Liberty was as expensive as what we were selling a $20 Lib for. And now we're getting to a point where the $5 Liberty is going to be selling for as much as the $20 Liberty when I first joined in 2018, Joe. It's not too far away to where we're going to be spending $1,200, $1,300 for a $5 Liberty. So it's just about the discipline of getting it done. So if you're trying to save up for that ounce, it takes you a long time. Nothing wrong with getting some 10th ounce, right, Joe? Or getting some quarter ounce $5 Liberties.
You think about. I was just thinking about. I think the first 10th ounce gold piece I sold, I want to say it was $38.
Yep.
It was $38.
I got Silver Eagles that much now.
Right. And I'm sitting there shaking my head going, guys, we're the cheapest in the country at $310. 800-951-0592. Patriot Radio News Hour. Final segment for the week. Gold continues to roar higher as now Fed governors are saying, hey, inflation's below 2%. Let's cut rates even more. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up the week here. Gold's going to close at a new all-time record high right now, $2,622. You got December gold now at almost $2,650 as Fed Governor Waller came out and said that, hey, the way I'm tracking inflation, it's down to 1.8%. Put me down for a half of 1 point, please, on rate cuts. Get ready here. The dollar at the lows now, pretty much of the year, and I think we're gonna 2025. I think we're gonna talk about dollar weakness. That's going to be probably the theme for 2025. 1/10 ounce American Gold Eagles. You don't have to buy 100 of them. You don't have to buy 50 of them. You can buy as many as you want. $310. That's cheaper than anybody out there. $5 Liberties. Gosh, quarter ounce, 1866 to 1907. We're taking this gold's up $35, and we're taking $30 off. $735 on that quarter ounce. 800-951-0592. And I guess, Jason, I think what we'll see, any data that shows weakness, you're probably going to see rallies. That's my guess, right? And why will we see rallies? Because then there'll be more people saying, okay, instead of 2 25-point rate cuts, maybe we're going to get 2 50-point rate cuts, right? Like Jeff Gundlach was talking about. And I think any weakness in the data for the next probably 4 to 5 weeks leading up to this next Fed meeting, you're probably going to see rallies.
I think we got 3 50-point reductions already lined. I think they've already lined it up, Joe. And I'll tell you this, if the job situation gets progressively worse in the next 6 weeks, they'll go 3/4 point. They need to. I really believe that they need to get these rates down quick in a small time frame. The last chance they'll have will be January, where they'll have this so-called lower inflation. And then I think starting next year, you'll start to see inflation numbers start to pick up as the year goes on, especially after March. And they got to get them down fast, Joe, because I think they're going to do an about face. I think there'll be one meeting where they'll just hold it in place for one meeting. Once they got them down, I think they'll hold it in place for one meeting and then right back up. I think they launch them right back up, and that's going to be in 2025, late on in the year.
Yeah, and and it's funny. We always tell you gold is the leading indicator here.
Yep.
And it's going to rally on dollar weakness. It's going to rally on the rate. Of course, we told you this was going to happen. This isn't a surprise to anybody. But if they start talking inflation's coming back, oh, my Lord, right, you're going to see another powerful move into these gold markets. And, of course, let's not forget, it is an election year. There's going to be a lot of people upset thinking that this is going to hurt Donald Trump the lower the rates go. I don't know. But maybe maybe hedge your bets a little bit, right? Maybe is John Paulson right? Everyone's going to sell all their stuff and buy gold if Harris is president? I don't think so, but you never know. 800-951-0592. Jason and I, hey, listen, have a great weekend. We'll be back next week. But before we do, we got to go to the half-empty cup. We'll be right back.